Hi, my name is Barry Remington with the Barry Remington team, powered by WK Real Estate out of Boulder, Denver, Colorado. I'm here to give you a quick 2023 market update as we get ready to turn the new year. But first of all, I want to welcome Coach Prime to Boulder. That's a huge deal. I mean, if you're not watching the TV, and that guy is going to bring a show to Boulder, Colorado. He's going to bring a lot of money into Colorado as well. So that's good in the long term. I'm super excited about that. If anybody wants to chat about it, please give me a call or text. As far as the market goes, the next 3 to 6 months is really going to be predicated on what inflation does. If the markets seem to think that inflation's coming down and starting to come down, then I see the Fed not raising rates as much or as rapidly. They raise the rates at the fastest pace in history. You can already see that it's put a clamp on hiring and even quite a bit of letting go and layoffs in the tech market, especially, which is ultra sensitive to rate hikes. As we go forward, the market is really a market for professionals, right? You either have to buy, you want to take advantage of lower prices, you moved into the area, you're trying to get out of apartments, that kind of stuff, you're in a good spot. If you're selling in this market, you're either moving out of town or you just want to get done. You want to get it off the market. It's a professional's market. You want to have somebody that works it day in and day out and knows what they're doing on the selling side, how to prep for it, how to negotiate, how to get to the closing table on the buying side, finding that right home, right? Negotiating the best deal, getting a good price for it, including the terms, walking through inspection where you actually have a lot of leeway to ask for things. You know, as far as going forward, I think if rates get back up, they dropped to 6 3/8. So we had a pretty good drop here in the last 2 weeks. As far as mortgage rates, they're down at 6 3/8. If they go back up above 7, which they did for briefly, then that means inflation's really having a tough time getting under control, and employment's still pretty strong. If it gets below, it means that maybe they've gone a little bit too far and employment's dropping rapidly, which will curtail a lot of demands, which will bring down rates. I think if you get rates under 6, that you're going to see more activity, from the buyers, that they'll look at it and say, hey, I can get a decent rate and still maybe a decent price going forward. As far as what's key, employment is the key thing. If you look at that, we'll know how the market's going to react here in the next 3 to 6 months. After that, I just don't know. It's going to be 3 to 6 months for the rest of the year. The market's changing rapidly. 1 week we'll have some activity, next week we won't. If you have questions, please give me a call, text, email. I'm going to do a video on buyers and a video on sellers. You might check that out if you have interest in either one of those. Also, new builds, they're giving some great discounts out there. There's negotiating room where it wasn't in the past, where you had to sign up and put your hat in a ring just to get a home. So they're very motivated because they have huge carrying costs. All right. Hey, have a great holiday season. Appreciate you. Please call or text, email.